Okay, 21st of February, Rudy here. Now, one of my subscribers has told me that Marcus Padley has sold his position in his Wire ETF. If you didn't know, Wire ETF is full of global copper miners. We'll go through that and why I've been buying it and still continue to buy it. So before we get into the ETF, just the fundamentals of, let's start with copper. So this is a monthly chart of the copper price since the 2000s. What's copper used for? Well, it's basically its high conductivity makes it essential for electronics. So EVs, they need 80 kilos to make a vehicle. AI and data centers require copper for power infrastructure, cooling systems, renewable energy, solar, wind, energy storage. Copper's like the your veins in your blood. It's the veins for the electronic world we're moving into to send all that energy around. And the key factor here is this is the supply-demand deficit. So demand is exceeding supply. So this is 2026. So you can see that there's deficits going out. So if demand outstrips supply, prices go up. And why? So because what happens is when prices are low, it's not economical to build a mine and produce it. So that's what happens. That's the cycle. And we're currently entering a resource boom for the next decade or so, of which you've got copper, oil, gold, titanium. They're all going to be booming. But this is just about copper. Because once you've got a piece of land, it can take 10 to 20 years to turn that into a mine. So anyways, in the chart, from a charting perspective, I've got just a short interim term target up here for the actual copper price. So everything, so nothing looks like a sell. If we look at the actual ETF itself, so this is the Wire ETF. So it's made up of 40 copper producers, of which 4 of our boys, BHP, Sandfire, Capstone, DVP, are in it. They're not the top holdings. So you've got Sumitomo, London, 5%. So you can see it's pretty equally weighted. And we'll have a look at a few of them so we can get a feel for what's making up this chart in the ETF. Anyway, so I understand he bought at 1905, so he's bought down here, and he's exited at 24.32 this week. So he's probably sold it on Wednesday, and you can see here I've had a buy. Well, I started this channel 12 months ago, and it was one of the first ETFs I was saying to buy, and you can see we've been buying all along the way here. $10 a month, you can join the channel, do ASX and US ETFs and shares for your super fund as well. Retail super funds like Oz Super, you can buy shares. Anyway, that was the marketing pitch. So back to why I'm buying, because I think if we look at the underlying holdings, so we got Lundin. Now that doesn't look like it's about to crash, does it? So they're a copper, gold, nickel producer. It's very rare to find a pure copper miner. So like this guy is 85%. Boliden, European, copper, zinc, nickel, they're 25%. Hudbay, copper, gold, silver, zinc, 57%. Southern Copper, So big miner in Peru, Mexico, 30% copper. If you see this little notation here, means there's two other ETFs, XMET and AINF, that I like. These companies also are in that ETF. But again, that's a bullish. That's not a chart that's about to crash. First Quantum, a big miner in Africa. Antofagasta, Chile, again in those ETFs. Freeport McMahon, so they're the world's largest producer of moly, 75%. So again, these charts are all setting up for a run, not a crash. Tech, so mines in Canada and Chile and USA. Ivanhoe, so they're over in the copper, PGMs, zinc, nickel, in Africa. Okay, so that one just looks like it's going to do a bit of consolidation. And then we've got our boys in there. So we've got BHP, Tank top holding. Tank's a core, it's the nickname for a core ETF we have in our model portfolio. Join the channel. BHP is the top holding in it. That doesn't look like it's going to crash. DVP, so they're a producer and a developer. You buy him in your Oz super fund. Capstone, so they reported this week. They've reported flat production guidance, buying opportunity. And Sandfire, so they're all in that wire ETF. They reported this week their profits are up 95%. So you can see here we've been buying along the way. So that's why I'm pretty happy to still be accumulating and buying this wire ETF. My preference though is this CopJ ETF. You can't get it in Australia, you can only get it over in the US. But so these are the next level down. So producers and smaller producers and developers. But 12 of the 43 are on the ASX, so they're our boys here. And why do I prefer it? Because I use the concept of ratios. So we take the chart of CopJ and we divide it by the chart of wire, and this shows us that CopJ is outperforming wire, and it should continue because that's what happens in a bull market. The big boy, although this has been, the little ones have been leading all the way, so they will continue to lead. So some of the international holdings in CopJ is you've got this Taseko. So they're actually a producer, so they're not all developers, and they got a project. So a lot of them are producers with projects. Ivanhoe, so they're a developer. TMQ, so they're a developer in feasibility studies. And then in terms of our local lads, so we've got some producers. We've got A1M, a producer in Queensland. 29M, so they're in Western Australia producing. And then we've got some developers which are in CopJ. So we've got Hot Chili, they're over in Chile. CVV, so they're at DFS stage. So these are developers. You've got Firefly, so they got a copper gold project in Canada. And CY5, so they're, because we either buy them as ETFs, or if you're like in a super fund, you can't buy the wire ETF, but you can buy individual shares. So we've been buying them all along. So if you want to sell wire, you can, but if you want to find out other ETFs that we're buying on the channel, ASX and US, join, only $10 a month. A cup of coffee or 2 cups, depending on where you live in Australia. All right, let us know your thoughts. See ya.